Bitcoin hit $126,000 overnight, now sitting in a critical area right around the previous all-time high. Half of the world seems to think that Bitcoin is about to rocket into price discovery, while the other half thinks that we are likely overbought and do a retrace here at resistance. We're going to talk about all of that, but more importantly, all of the things behind the market that are actually driving it, including historic flows last week into Bitcoin and crypto products. And who better to discuss it with than Andrew and Tillman? Also, guys, big news. We videoed it. It's not ready yet, but we got me all set up, and I am ready to roll with Arch Public very publicly with my Robinhood portfolio. We're going to get into that and more. Let's go.
Let's go.
$126,000 for a Bitcoin. That seems like a really good price. Again, it's really hard to be bearish when you look at $126,000 Bitcoin, but somehow people are able to do that. They're able to be bearish. And I think it's very important when you talk about bearishness or bullishness that we talk about time frames, because I would imagine, Tillman and Andrew, if you say to someone, hey, do you think it'll be higher in a year? They'll be like, yeah. If you're like, do you think it'll be higher in a week? Maybe they're really kind of, skeptical.
Well, I think
that's where I stand.
It appeals to both parties, right? It appeals to the trader who loves volatility, and we may see some volatile swings from here, both to the upside. Price discovery is one of the most exciting things that you ever get to participate in as a trader. And it's few and far between. It's not often that you get to see this type of action. But you could also, with that probably comes a lot of leverage trades and a lot of margin that is up for grabs if they can push it lower and force those margin calls. So that's the nature of the markets. It's like, the safest way to play is on the long time horizon. Find something that you really believe in, buy it. And as Andrew always says, the rich never sell. They just borrow against it and keep doing that over and over again.
We are.
Go ahead.
Yeah, we are at a historic moment with Bitcoin, and we shouldn't just, kind of quickly swim by it. There are, paragons of finance, as well as, 200-year-old institutions that are pounding the table on Bitcoin. And let me give you a few of them. Paul Tudor Jones pounding the table on Bitcoin. Morgan Stanley, 2 to 4% should be what's in your portfolio with Bitcoin.
Yeah, how about that?
Yeah.
How about that one?
Goldman Sachs pounding the table on Bitcoin. JP Morgan pounding the table on Bitcoin. BlackRock, of course, pounding the table on Bitcoin. Jim Chanos, long Bitcoin, short MicroStrategy, which, by the way, has been an epic trade over the last 6 to 12 months. Larry Fink, absolutely pounding the table. And Alliance Bernstein started out the year pounding the table on Bitcoin. And that's just, I'm not sharing the obvious ones like, Michael Saylor or Standard Chartered or whoever, or Tillman Holloway, for an example, right?
Yeah, like, why do they not talk about him? What's going on here?
Yeah.
There's the Morgan Stanley news, by the way.
That is...
Let's replace that with Tillman Holloway and say 20 to 40% and replace crypto with Bitcoin, and we're Tillman.
That headline right there is, it's hard to fathom 3, 4, 5 years ago. Absolutely.
It's hard to fathom now. I actually find this one hard to fathom now.
Yeah, it
because
is.
Only a year ago we were talking about what happens when BlackRock says everybody should have 1%. That would be insane. Yeah. And that was when BlackRock already had a Bitcoin ETF approved and was talking about tokenizing the world. Now you have the holdouts talking about a 2 to 4% within a year.
Well, yeah. I'm here to hot off the press breaking news. It's not for you guys, but I don't think 2 to 4 is the stopping point. Like, this is a slippery slope that everybody's on, that everybody's subject to now. They're measured against now. And what did Saylor say? That Bitcoin would ultimately fall into a range of like plus or minus 18 plus S&P, right? So you're talking about something that still, there's just a lot of movement to be had. Like you said, the water in the gates are just now opening where you get, 2 to 4% allocation. What happens when, people aren't afraid of it anymore? They're still afraid. I mean, if kind of the first out of the gates is we've heard 1%, and that lasted about 6 months. Now we're at 2 to 4%. What's next? Well, I think eventually people are going to find out that about 11% offsets all of your inflationary erosion. Like, that's a really great number to start at from my vantage point. Anything above that, I think, is about gains. You're chasing gains, and you just need to know that. But I think from a prudence of preservation of capital perspective, I think the world is going to gravitate towards more than 10%.
Yeah,
number.
the Sharpe ratio for your portfolio, you can do the math, right? And the more you increase, there will be a tipping point at which it's like 20 or 25, it's risk, right? But at 8 to 12, that might be the sweet spot where the idiosyncratic risk of having this stuff in your portfolio actually helps. You guys mentioned Sailor. You want to see some breaking news?
Ready.
Check this out.
Yikes.
I'm doing a fireside with Sailor, which I swore off conferences, and then they were like, "You want a fireside with Sailor on the main at the conference at Money 2020, which is not even a crypto."
You know what's strange about fireside? There's never a fire. There's never a
There's
fire.
no fire, and I'm not going to talk. There's no fire, and I'm not going to say anything. I'm going to say, ladies and gentlemen, I really appreciate you all showing up for me. Very flattering that this room is so full. I've built a reputation. Michael, you have 30 minutes. I have no time for questions.
Another headline that we've got to talk about in the first 5 minutes of the show is the S&P 500 has created a quote unquote index of crypto assets / crypto stocks. What's going to be the largest, on a percentage basis inside of that? It's going to be Bitcoin focused stuff.
Of course.
It is, the headlines are so fast and furious. A reminder too, that there's an evolution going on associated with Wall Street, that since the financial crisis, 2008, 2009, effectively regulators took about 50% of the type of activities that banks and investment banks could do to make money off the table, right? So all of these investment banks, the Morgan Stanleys of the world that used to do IPOs and all sorts of stuff, right? Had huge trading desks, yada, yada, yada. All that went away. And so instead of 10% of their revenue on an annualized basis coming from wealth management, over a 3-year period, that moved from 10% to 55% pure wealth management. It's now like 70%. So when Wall Street gets their hands on something that they can make money on, create product around, and do that over and over and over and over again, they're foaming at the mouth. Right?
Well, with one caveat. How deep can this pool get? How much money can we pump through the machine before it breaks? Well, this is like the holy grail of instruments. This is like, we got 8 decimals to work with behind the zero. This is the greatest asset class in the history of mankind if you want to create very deep liquidity pools, because it's essentially a self-fulfilling prophecy. At some point, if you have enough capital, you start with a small enough market and you create the market. And we're seeing that markets being created all the time. Interesting few headlines that I grabbed, that I took notice of. Coinbase, they officially filed for their banking charter, which not surprising, but also, goes to say, it goes without saying that if they have 100+ million customers and they get their banking license, from a customer base perspective, they'll be the largest bank in the world. They'll be serving more customers, at least. Then you've got federal court case dismisses the Board 8 lawsuit. So we have legal clarity for all of the NFT developers out there, which we have not had. And it started with, some would say the biggest. And so I bet Yuga Labs and everybody over there is pretty excited about that today. That's a massive win for the industry, I think. And then you've got stuff like SUI-based treasury plans. So this thing is going, you talk about deep and wide. I think we're enamored with Bitcoin because we have a love affair with it, and we can see the depth of liquidity that Bitcoin itself can hold. But if you then take it across the broader markets, this is an ocean. We haven't even started the game, in my opinion. I mean, this is just beyond bullish. Everything is pointing not only up, but just like straight up.
I mean, the people in my comments are so sick. Getting spooned by sailor. You spelled it like a sailor, but that's fine. While he whispers Bitcoin to $200,000 in your ear. Oh, God. All right. Anyways, continuing on. Andrew's now checking for headlines. He wants to compete with you. He's like, what else do we got? Can I show you some? Because it's astounding.
I'm just
Is that me or you?
I'm just reminded that whoever the analyst or analysts were that put together the Black Book for crypto and Bernstein at the beginning of the year were, I don't know if they're psychic or prophetic. They said buy everything. And there's never been a more right prediction ever.
Yeah.
Everything has gone up since then, and it's picking up speed, right? So the things that Tillman just shared, the stuff that you've shared, Scott, already, it's picking up speed. And listen, we now have Robinhood's CEO Vlad talking about tokenized real estate, and they've effectively solved it. It's just a question of when it's going to get approved. Well, it'll get approved quickly. It won't take a ton of time. It'll get approved quickly. On top of that, you've got intercontinental exchanges. So the NYSE,
hold on, before you go off of real world assets, did you see the World Liberty Financial is doing the commodity tokenization? They want to tokenize oil, gas, cotton,
Obviously,
timber.
why not? Tokenize cotton.
Yeah, well, but I guess here's the point: is like the RWA piece to this whole puzzle. It could be bigger than everything else we've talked about. I mean, you talk about like every asset
stable coins
on the planet.
Stable coins are tokenized real world assets.
You know what's funny is
I mean, to some degree, and Bank of New York explores tokenized deposits as blockchain payments catch on. There's the largest custodian on the planet. And this, Tillman, is the conversation we had with Caitlin Long that blew your mind so much because she has the patent on tokenized bank deposits.
Well, now you basically can take your furniture in your house and create a token for the value behind it and deposit in your bank and get a loan against it.
And if the house burns down, you still have a house because you got an NFT of it.
Well, and your token has an itemized list of all the furniture. You just submit that to your insurance claim virtually. Smart contract approves it. You get payment instantly. I mean, what kind of world are we headed towards? It's going to be amazing.
By the way, a reminder that last week we came on the show and we were just kind of all, bummed out. We really don't have a ton to talk about. Now, all three of us can't shut up. That's how quickly this space moves, right? By the way, we're at a shift moment where 2 years ago, even the biggest and best money managers, the biggest and best hedge fund guys, still looked at some of their colleagues that were pro Bitcoin as whatever, dude, you're dumb, right? You're going to be proven wrong, or that's cool, but I don't believe in it. That's shifted now. That's shifted. If you're not involved in Bitcoin in any meaningful way, you're looked at as you don't get it. You're not on the cutting edge. So when all these organizations are coming out with you need to be involved, 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 that means that the shift is now the prevailing theory is you need to be involved. You have to have a percentage that is part of your portfolio or you're falling behind. So why would you do that? Why would you fall behind? So now the peer pressure is you need to be involved. Whereas 18 months ago, the peer pressure was, I'm still not touching that. I don't believe in it. Right. Again, another huge shift. I mean, we're about to crest $100 billion on BlackRock's IBIT product.
I have you guys. I don't even need to do prep anymore or bring up stories and stuff. You guys got them all. It's right here.
Well, I mean,
Billy watch. This is from Daltune.
I'm on my 10th cup of coffee this morning. I like to watch when Bitcoin's over.
It's 19 a.m. Tillman.
I'm not entirely sure he went to sleep last night, to be honest.
Honestly, one little bit of meth might be better than 10 cups of coffee by 6:19 a.m.
I do half cap, so it's 5 cups.
5 cups and an extra peeing. Yeah. Don't know how you make it through the show. But yeah, $100 billion for IBIT. This is their most profitable product ever, the fastest that ever got there ever, faster than the ones that are the biggest in the world ever. There's not a single metric where these are not crushing. And IBIT's just one. It's not like IBIT's the only Bitcoin spot ETF. Check this out. Weekly crypto asset flows. That's 6,000, which means 6 billion.
Yeah.
6,006 billion on this chart. 6 billion inflows into these last week.
I said
In a week.
We had the second largest inflow of all time, I think, last week, didn't we?
Yeah, it seems like it should be the first at 6 billion. It's crazy.
Well, again, remember, sell in May and go away ended. The end of Q3 showed up, and now we're into Q4. People have locked back in. People have had meetings with their advisors. At Morgan Stanley, their advisors are saying, hey, look at this document that our GIC put together. You need to put money into IBIT.
Well, everybody has been meeting with their accountants for the last 30 days, right? It's, everybody's talking about planning for next year, taxes. Well, you're 100% right, Andrew. It's kind of just systematic. That's the easiest trade in the entire market, right? Is the sell in May and go away. I'm going to say a quote from somebody that I highly respect, and not just highly respect because I think he's a genius, but I've met him, and I think
So you're talking about me. I'm ready for this quote. I've got
here's the quote that he said about the tokenization of assets. He says, it will eventually eat the entire financial system. That is what Vlad said on stage at Singapore's Token 2049. Which basically means what we said it is. It's the tokenization of everything. Everything is going on chain, in his opinion. That we finally made it, guys. Everybody believes in blockchain now, and Bitcoin is the story now. But that will be the story, in my opinion, because that changes every business that gives you a piece of paper that declares ownership or proves ownership is going to be impacted by that statement.
By the way, another sort of positive flag associated with 24/7 trading just dropped this morning. I don't know if you guys noticed, but Polymarket never turns off. Their particular setup trades 24/7, and Intercontinental Exchange just put $2 billion into Polymarket. So, it's only a matter.
Tell us your secret sauce, wizard.
And listen, so
didn't CME also just say they're going 24/7, 365 last week?
So everybody needs to understand Intercontinental Exchange. They own literally 90% of the exchanges across the world. The only ones they don't own are China's, basically. Those are the only ones that they don't own because exchanges are completely commoditized.
Andrew, for the layman of the group, including myself, list some of those ones that they own.
So the New York Stock Exchange,
household names.
Yeah, so they own all of them. Germany's exchange, all of them. And so if you're investing $2 billion into Polymarket, you're doing that to get access to their technology. It says, how do you stay on all the time? How do you handle all of the volume? How do you do that? How does that happen? Because we're going to do it coming up soon. So whether it's tokenization, there is, again, we're in a moment where the innovation in financial services and innovation in financial technology is coming really fast. It's happening really, really fast.
I look at the industries that are laden with fat, that have been complacent for a long time, and I think that's where a lot of alpha lies, to be honest with you. I'm looking at some of these insurance companies. I've had a problem myself insuring property over the last 3 years. They're becoming really, really hard to deal with as it pertains to high risk fire areas, flood areas, earthquakes, tornadoes, basically anything that you would buy insurance for they don't want to cover, or they have very extensive loopholes that they can utilize in court to get out. And then they rely on honestly fighting everybody in court. I think at some percentage, just knowing that nobody can support the court costs and no one really has the education to go seek out a lawyer that can do it pro bono. But I think a lot of folks just give up on it. But I think the insurance company and smart contracts for claims and payments, I think that is going to absolutely get gobbled up in a very short period of time. And if you look at all the fires that happened in California and all the people who had insurance that didn't get paid out on it, and the lack of transparency that's behind it's a mess. And I think that industry is ripe for the pickings if somebody comes in with the technology that we know exists right now.
Tillman's coffee energy this morning is reminiscent of Kramer when he got access to free coffee for life. I can do it whenever I want.
I'll take it.
I'll take it.
Showing our age. Do people know what Seinfeld even is now?
They don't.
American average 20-year-old kid, you're like, hey, have you ever heard of Seinfeld? Who?
Hey, listen, I was into Frasier.
Is that
I was
TikToker?
even into the dorkier of the two. I mean, yeah, you just keep going back. Those are great shows. We don't even have anything like that today. It's junk.
Wait, what was the show that Frasier was on before Frasier that they spun off? Frasier was a character on another show, and they spun off Frasier.
Cheers, yeah, cheers.
Cheers, yeah. Norm.
Cheers. I was a little too young for Cheers. I watched a few episodes, but it wasn't my jam.
I watched it. It made me want to get drunk when I was 7. So we have an interesting chart here from Bitwise, which is showing gold versus Bitcoin ETF inflows by year. So we've seen a lot of Bitcoin trails gold type narratives of late, including on CNBC and a full video on a show. Obviously, that was short term, but this is gold ETF inflows. And so for those who don't know, the gold ETFs were kind of flat and built slowly and then absolutely exploded when they were launched. Well, right now we have Bitcoin year one had about 30, it looks like 6 billion in total inflows to the ETFs. We're at about 25 already. We just did 6 last week, although that was split among crypto products, not entirely Bitcoin. That will end up surpassing it. If this chart ends up following the path of the gold ETFs, they're going to need a lot more real estate at the top of this chart.
I mean, inflows are the thing, right? So inflows are the gasoline / oil that moves the entire engine. And those are not going to slow down. If anything, they're going to pick up steam. At the edges, you have the Rick Edelmans of the world saying that, people should have 40% of their portfolio in Bitcoin. On the other end, you've got, worst case scenario, 2% at Morgan Stanley. So there's not going to be a meaningful slowdown. We're now at a point. Again, just take a look at Bitcoin price action. We have not had a meaningful downturn that even approaches what we're used to in cycles in any way, shape, or form. It doesn't exist.
Can we agree that the 4-year cycle's dead? I don't think we're there anymore.
Not
guys.
everybody agrees.
I don't think everybody agrees, but I think that's the case. And until proven otherwise, I've seen a systematic rise of price, $10,000 at a time, with an increased buying floor, massive buying pressure, but not retail that's chasing the green candle, holding pressure in zones. Like, that's all indicative of major institutional accumulation.
The people who want the 4-year cycle to be intact are the altcoiners who are waiting for their pump, because it was.
That's not false. I'm one of those. I think, right.
No, I don't say that like with a critical. But, if you believed in the 4-year cycle, the first 6 months of this year should have been really crazy for altcoins, and they kind of haven't. That said, you can open a chart, and I've said this since day one, but there is an alt season. It's just happening in crypto-related equities. This is the irony. Mike Alfred was on this channel for like a year telling people to buy it between $2 and $5. It is going to open. Last I checked, pre-market was 62. It's going to open at $60. Like, there are 30 and 15, 20, 30, 40 X's to be made right over the place. Oh, and by the way, there's also certain tokens doing it. You just got to be looking in the right place. Look at BNB.
Yeah.
I mean, this is insane. BNB is $1,300.
I think when people make
thousands
money,
and thousands
they
of
spend
percent
money.
increases.
Yeah, I think that there still will be an alt season. It may be muted, but the constant inflow of capital that we're seeing into the overall space is going to gravitate towards higher upsides, right? So, the altcoins, you could argue, do provide a much higher upside to Bitcoin. Bitcoin could do a 7x from here, but can it do 100x? No, not in our lifetime. Maybe it can,
Right.
in our kids' life. But there's plenty of crypto projects that are going to be born today or this month that will 100x, right? That there's that much expansion. So it's about when you get in, but that's proportionate to the risk that you're incurring as well. So it's just, pick your poison. Do you want
imagine the meme coin that launches when Taylor Swift and Travis Kelce get married.
Oh, it's insane.
That thing's going 1,000x.
Yeah.
Over.
Listen, I think utility in meme coins is coming. Mark my words. I think people will start selling their merchandise only. I think that's the easiest bridge that I can see right now being built, is a star going, buy my meme coin, because it's the only thing we take at any of our merch things, and we don't sell our tickets in anything but our meme coins. You do that, you create an infinite, the demand's there. People are buying, Do
you think that he'll take her last name?
No.
Travis Swift?
No.
That should be the token, even if not.
That is a good token. But,
I just gave away all the hot alpha right here on my show.
Yeah, mark my words, there'll be 12 Travis Swift tokens launched before the end of the show.
Before this is done.
Yeah.
Damn it. So what else do you guys want to talk about? Should we talk about Archie Public?
Heck yeah.
Time? Do you have more topics? Should I show? I got set up. Want to show you guys? I did a long onboarding call. We recorded it. It will be edited because 90% of it is boring. You guys don't want to watch that, right? So we're going to edit it down to the key points, but I can show you right now. Here's my Bitcoin chart. You can see the DCA entries right there on the BTC intelligence. But here you go. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 alerts set up. And that is for the 10 algorithms that I've set up. I can give the layman's brief. So this is starting now, so we haven't done anything yet. Feels like I should have plowed into this like a week ago and not been lazy, and then we accumulated a whole lot of Bitcoin while it went up 10%. But hey, that's on me, scheduling. But
I think the first thing you have to admit when using automation is that you're not going to chase the market anymore. Like, there's a mindset shift. So I don't look at the markets as like, oh, I missed out. That's a FOMO type of emotion that causes bad decisions. It's more of a set it and forget it, set up enough triggers to where you're going to let the market do its thing, and it's going to take advantage of the opportunities that are presented to it. And it's something that, a lot of people need that juice, and you're welcome to go trade for that juice. But the point of automation is to remove that juice, is to make it where you look back over 6 months and you go, oh, wow, we've done a lot here. And I wasn't emotionally swung this way or that way during that process.
Yeah, so we had a long discussion with the team. We are tweaking it. Another call today because I want to get it particularly right. I think I'm going probably a little overboard because we're publicly sharing it. But we decided to start with just cash. So originally my idea was that I was going to start with 1 Bitcoin and an equivalent in cash. And they said, we want to just start it with cash so that we can show people, like, if you just throw money into this, how it's going to happen. So when you look at this, like these ETH, Solana, they're ARB, but they don't have anything to sell yet. So we have to start with the dips and the accumulation first, and then we'll be able to dig in more deeply to the buying and selling. But the idea here is to accumulate Bitcoin, Solana, and ETH first, and then utilize the cash yield on the ARB strategies to increase the account size in cash as well as coins, and then use that cash to completely reload and completely refresh. And just to show you guys for complete transparency, this is where we're starting. I'm starting with $100,000. See it right there. I've already earned $70. It would seem $50.47 of interest on Robinhood.
Well, I will say that it's phenomenal what these exchanges are doing on the interest side of things. I mean, you talk about Coinbase getting that bank charter. Well, I mean, you can get 4.5% on Robinhood and Coinbase essentially for putting cash on deposit. Who wouldn't use that bank? But yeah, I think the key takeaway here is if you start with cash, you're going to be accumulating a position. And then as that position accumulates, that's when the ARBs are going to actually start to kick in on the sell side. But there's a lot of people right now, a lot of our customers are in the same camp that I think the three of us are in. We don't really want to be heavy sellers right now, especially with the accumulation that we've already done, because there could be tax implications that we don't want, and all sorts of reasons why you don't want to sell your previous stack. But the new stack won't have those tax implications. So there's this great way in which you can build the ARB strategies from scratch with the accumulation, and then turn those loose to, like Scott said, yield farm, and then place that yield back into the accumulation of more Bitcoin or whatever asset.
I would imagine that with my cost basis on these assets, that if we were aggressively running the ARB, there would be a little bit of selling going on here.
Yeah, there would be, absolutely. And our customers, so that's a key point. Each customer has a different cost basis. You can manually enter your cost basis so that the software knows what it is, or it will keep track if it's a position that you acquired prior to using the software, or you can allow the software, when it makes a purchase, it's going to record that cost basis. And then it won't have a trigger sell event unless it's above that cost basis. So the sell events are very individual, and it's based upon kind of what parameters you've put in there and how much profit you want to take off the table and when. So yeah, if you had purchased, if you had a lot of buy instances triggered on the ARB strategy, you would be seeing a lot of sell instances being triggered right now.
Yeah, that was my assumption, because listen, even manually, if I was trying to do this in my mind, you would sell some at like all-time high resistance, right? Just a little bit, and maybe you get a dip, or maybe you just get your cash and you still have more Bitcoin than you did because you bought some. So I'm never selling more than we bought, the way that these instances are set up.
That's right.
So I'm always accumulating.
That's right, and you're selling into the opposing volume that you want to be selling into or buying into. So a lot of people that manually trade, if you just look back, I urge everybody to do this. It's a good exercise for anybody that trades. Look back at your purchases and see if they took place on big green candles, because most people, they do. And including myself, like when I manually trade, I want to chase price just like everybody else does. That's what the markets do. They induce that in you. But the algorithm will only buy on giant red candles. It's predetermined. It's programmatic. So it's not fooled by the emotion of FOMO and chasing big green candles. It's looking for sales. It's looking for discounts. And you get to determine as the user what you qualify a discount as. So if you say, hey, I want a 10% discount on this time frame, and if that trigger event takes place, then boom, you're a buyer, and you get to determine how much of a buyer you are. That type of freedom, when you set it and forget it, and you have, Scott, it looks like you have 10 different algos running. When you set it and forget it, you have trigger events taking place all the time on your behalf, and because of the way that you programmed it, you know that they're exactly the way that you want them to be. They're happening on your behalf because you chose those settings.
We've got a debate in the comments, by the way, of people saying, Luca said, your buy and hold versus my ARB strategy, and Bit Billy says, I'm ready, bro. Bit Billy's starting at 9 figures, in case you're wondering.
Well, here's the deal. We just released.
We're gonna have to do it on percentages.
Yeah, we just released an entirely new line of algos as well, called our Oracle protocol, that add a bunch of functionality to everything that you're seeing there. Really, really extraordinary stuff. We've had products for several years now that beat the snot out of buy and hold. But we now have an additional line of products that beat our algos that beat buy and hold, right? So we're going to continue to innovate, continue to put out product, and people then can engage in that product in a meaningful way and get the results that they want to get. The other thing that I'll add is throughout 2025, Arch Public has had explosive growth. We are covering tens of thousands of customers at this point. And if you have ever wanted to work for a crypto company, if you have ever wanted to work for an innovative company, and this is your opportunity. We're looking for great people across all disciplines, whether
There's
it's
one
marketing.
qualifier though that you forgot to add at the beginning of that. We want people that have been customers of ours, because you know the software, and that skips a lot of training headache and all that. And all of our all of our employees right now are previous customers, and it's been exceptionally exciting to see the enthusiasm by which they come into their positions, because
you also have to be at least a red belt in Taekwondo.
So
third level, it's not that hard. But
marketing, sales, communications, research, all of those things. We'd love to talk to you. We'd absolutely love to talk to you. We're growing, and we've got to keep up with that growth. We really do.
One thing I want to be really clear about with the algos, I will reiterate hopefully every single week. My goal is not to see that 100,000 number go up. My goal is to see the amount of Bitcoin that I have go up. So I want to be very clear, because what I would love right now personally, and when you're an accumulator, I would love Bitcoin to drop to 100 grand right now and buy a whole bunch of Bitcoin. But then, if we're buying on the way down, my portfolio is going to stay less than $100,000, but I'm going to have Bitcoin a lot cheaper than if I had just bought $100,000 worth right now. So the metric for success is not going to be, at least in the short term, the dollar value of the assets.
Well, it depends. It depends on what the market gives us. If the market starts channeling back and forth inside of a ranging inside of a zone, you will see that 100,000 go up. Why? Because you're going to have a ton of arbitrage trades. You're going to have a ton of trigger events, both buy and sell, and that's going to create profits, because you're never selling with that box checked outside of profit. It's above cost basis. So if there's a trigger event on the upside, you are by definition harvesting upside yield, or yield farming that upside volatility. If the market channels, you'll see that number go up. If the market starts dipping, you'll see the number go down. Why? Because you're going to be buying aggressively on those dips, which is what you just articulated, is you're going to see a better cost basis, and you're going to be accumulating more Bitcoin at that better cost basis.
Dying now that I've launched this for Bitcoin to just take a 30% haircut.
Listen, that's dying. That's the most common thing that we get from our customers. This algo has changed my mindset about the markets. They used to get excited about big up days. Now they're really excited about big down days, because it changes that dopamine hit from watching it skyrocket and FOMOing in to, holy smokes, I've got somebody standing guard at the gate and acting on my behalf to accumulate the best cost curve that I can with the price action that Bitcoin gives me within that time range.
These guys are really trying to make this bet. I love it. Insider says, discussing Taylor Swift, the bar is getting low on the show. To be clear, I was discussing Travis Swift, because he's going to take her last name. It's pussy.
And meme coins. So it's a meme coin world, right?
But I mean, the idea that anyone who's accumulated, though, that is always the mindset. Unless you actually it's a big enough move that shakes your belief, or something technically you're looking at or something, or because you just can't stand the dollar value of your portfolio dropping. But if your plan is to never sell, I'm so pissed off that we're $125,000 right now. Because there's a lot of money I intend to make in the future that I want to put into Bitcoin, and would have loved to do that at 50.
Well, yeah, and don't we all? But I think it's all proportionate to the inflation that we experience over you're measuring the price increase of Bitcoin over the how many trillions of dollars that we printed over the last 10 years. Imagine how much more is left to be printed over the next 20 years. This move's going to be parabolic. I mean, what does Saylor say Bitcoin's going to be? 13 million? That's 100x from here. Didn't he say that, or was it?
Yeah, he did. I just don't know if maybe Saylor's top end predictions might not be our best metric.
Well,
because his top end prediction is the entire financial system, and I'm not saying that's impossible, but when your numbers are on the premise that we will by default eat the entire world,
Well, I think that defining the world is the most important metric there. It's like the world today and its current value, yes, but the fund that we're launching is a good example. It's like, how do you predict what the price of Bitcoin? How do you project what the price of Bitcoin is going to be in 10 years? Well, you can't say, well, let's just take what it's done over the last 10 years, because the last 10 years are disproportionately, there's a lot more upside there. What you can say is okay, proportionate to other asset classes, what do you think the erosion percentage will look like? So I look at Bitcoin and go, okay, what's $1 million Bitcoin? Well, $1 million Bitcoin is Bitcoin being what gold is today in 10 years. It sounds very reasonable to me. So if $1 million in 10 years is exceptionally reasonable, and that only gets Bitcoin to the $22 trillion asset class mark, roughly, what about the real, what is gold going to be then? Will gold be $50 trillion asset class? And then will we still be I just think that the amount of money that's coming into the world is going to blow people's minds.
It's funny because when we started talking about the ratio of gold to Bitcoin years ago, it was always that gold was like 11 to 13 trillion.
Yeah,
right?
Exactly.
So now it's doubled. But so like that was, gold was chilling 1700, 1800. It hadn't really moved. And people were like, well, gold will come down a bit. Gold will come down to 9 or 10 because nobody's ever buying gold again. This is what Bitcoiners said, just to be clear. They were wrong. It more than doubled. And Bitcoin will catch up. So they'll meet somewhere in the middle. Now, if your premise is that Bitcoin becomes gold or even 50%, you got to think gold potentially rises. I mean, it'll have its dips, but we've been proven wrong that gold will never be enticing again. Bitcoin's got
and you have to admit that Bitcoin's at $1 million then. Right. And so the question then becomes, when does that happen? And somebody I can't find anybody that could argue me away from a 10-year window. You see what I'm saying? Like that seems exceptionally prudent to me. So does 13 million look that stupid after kind of deducing that? 25 years from now, I don't think it is stupid.
25 years from now, I don't think it's stupid.
Yeah.
Something that's important to highlight too about what we do at Arch Public, service and communication is extraordinarily important to us. Extraordinarily
Let your kid
important.
in, man. Let your kid in.
No, that's
construction.
That's down in the basement. That's construction down in the basement. It's going to continue. It's going to keep
going.
going.
Take the kid out of the cage, man. It's like you're on live.
But there was, unsolicited is the best feedback. And I believe you were tagged, Mr. Melker, yesterday with somebody that just, again, had to say, you guys are idiots, both of you. You guys are idiots.
Laugh, Jack.
You're going to live with
Were you saying something? Were you saying something? Sorry, wait.
You're going to live with me now. Pull up that tweet where that guy tagged you and said all the nice things about the way that we've, handled communication.
Oh man, that made my heart sing. I love hearing people use social media for positivity, first of all, but it's always great to hear customers, give us good feedback.
Yeah, it was just, incredibly happy with the service and professionalism of Arch Public, their concierge team. Mentioned a couple people that, work on our team specifically. And just really, really, there it is. How we've spent months working with him whenever he needs anything, just awesome stuff. And all the fired off as well.
Yeah. The thing that I liked about it the most is it's resonating with our core vision and focus, which was making it easier for everyone to have automation working for them in the background of their life so that they can have the advantages of Wall Street. It have the advantages of all the hedge funds. They all use systematic algorithmic trading. So scroll up a little bit, Scott. I want to highlight something.
I'm laughing. This is the laughing your guys' response to it. This is how we view Josh. Totally.
Right.
By the way, I only read this is the only sentence I read of this. So it's really nice.
I know.
Something nice about you guys.
Yeah. No, up there it says, I am just a handyman and a home remodeler with a decent crypto background. So this program was a big jump for me. But after a few sessions, I'm pretty comfortable working with the basic algo, and I'm excited for the next few months. I think that's the thing that really is the goal here is to get people to have experience the first trades through their automation, and then the excitement that brings, and then the level of enthusiasm, and it just draws you in. And once you've seen behind this curtain, once you've experienced it for yourself, I think everybody's heard about algorithmic trading, heard about high frequency trading, but they've never gotten their hands on the software themselves, right?
I should not be allowed to control the buttons. No one man should have all this power.
That is how we view Josh internally at Arch Public.
He's awesome.
Yeah, he is good.
By the way, this person's name is I'm Your Huckleberry, which is the
it's high level
tombstone. Yeah, but from it's Doc Holliday in the movie Tombstone, one of the greatest movies. I'm Your Huckleberry. I got you, Andy Cruz 1000. I know exactly where you're at on that. It's amazing. So anything else for us left to divulge here? The secret sauce. People are saying, did it buy the dip yet? Guys, it's down like not even 1%. No, the answer is no, not yet.
Yeah, no, it will trigger when the market presents the right opportunities. And Scott set those opportunities with our team. So there's certain percentage trigger points that he has in each one of those strategies. And so if the trigger event is large enough, it'll go capture that trade.
I got it, guys. I've got to run. I've got to feed the kid downstairs that keeps pounding at the bottom of the floor.
It's unbelievable. Like the Goonies.
Clearly.
It's definitely sloth. Yeah, I mean, there's no question in my mind that you have sloth in the basement.
I wish I did.
You're a Fratelli.
Right.
Oh, man.
Rocky
what's her name? What's that lady's name? Rocky Road? What's her name? The throw mama from the train lady.
That's right. You did throw mama from the train too. I don't know who she is. I'm certain she's not around anymore, but she was epic in both films.
She looked like she was right on the edge of not being around anymore
in 1988. Like that's correct.
If she's still here, maybe she was like Gary Coleman, or more like the opposite, I guess, like a Benjamin Button. Maybe she's like a 14-year-old kid who looked really old and could play. Oh, man,
I was pleased
that whole era of like Webster and Gary Coleman. It was like America was literally obsessed with like adult black dudes that could play kids.
Yeah, very interesting. Small people, as we like to call them.
But they weren't technically small people. They had some aging thing.
Really?
Gary Coleman disorder. Guys, we're going to get into the real stuff. Congenital kidney disorder and progressed into nephritis and focal segmental glomerulosclerosis. He was small.
Yeah.
That's what I got. All right. Before I say anything I deeply regret and gets me canceled, we're going to go ahead. I will keep you guys updated. We'll tweet when we get the buys. I'm going to have one more meeting today. We're going to dial it in. I want it to be just buying all the time.
Yeah.
You know, I'm feeling the FOMO. So we're going to add a little bit of that in small amounts. And I'm just going to keep dumping cash in. And we're going to have a great time.
Awesome.
Robinhood. Awesome. We were also restricted by Robinhood's like deposit policy, which took a little while to actually get money in there, which was part of the reason. All right, Andrew Tillman, thank you guys so much. Everybody, it's been a pleasure and an honor. Go feed sloth, man. See you guys later. Bye. Rocky Road. If your mobile number was stolen and your passwords were reset, would you even know it until it was too late? Your crypto wallets, exchanges, email, bank, cloud accounts, gone because someone took over your phone number and hijacked your two-factor authentication. This is called a SIM swap attack, and in the crypto world, it's one of the most devastating ways to get hacked. It's not rare. It happens every single day. That's why I've personally been a customer of Afani for years. In fact, I've been with them since before it was even called Afani, when I was the victim of a SIM swap and my friend Charlie Shrem introduced me to the CEO and founder Haseeb. I trusted them with my security first, and because I believed in it so much, I later became an investor in the company as well. Afani is built to stop SIM swaps, protect your privacy, and back you with $5 million in insurance just in case. They even include complimentary international data roaming so you can stay secure but also stay connected all around the world. Top crypto investors, traders, influencers, public figures, and financial institutions use Afani because one attack can be so costly. Afani is offering a discount for our community, and to learn more, go to afani.com/Scott Melker to get a secure mobile service with peace of mind. That's EFANI.com/SCOTTMELKER. You can also find the link in the description and show notes. In crypto, security isn't optional, it's survival.